Judas swing, turtle soup, silver bullet, breaker blocks, OTEs. These are just a few of the many hundreds of different ICT concepts that go around nowadays, and the list really goes on and is endless. Now, a little bit of context. I used to trade these ICT concepts around 5 years ago when I first got into trading, but after around a year or so worth of trying and failing with this approach, I gradually started to implement a newer and more simple approach to my trading. And after I implemented this change, I started to see consistent results on my live personal account, with the ability to make around 2 to 3% consistently on a month-to-month basis, as well as passing my first prop firm accounts. Fast forward now over 3 years, and I trade full-time with a multi-5-figure personal account, as well as over 100k in prop firm capital. So in today's video, I'm not only going to be sharing this exact system with you guys, but I'm also going to be giving away completely for free the full trading plan, which not only includes the strategy itself, but also the risk management plan, as well as some of the key processes which I implement around the strategy to make sure that I'm constantly improving and refining the strategy and staying ahead of the market. And by the way guys, this system that I'm going to be showing you today is such that you can show up to the charts consistently every single day and repeat it in a simple and methodical, systematic approach, step by step, so that every single time you come to the charts, you know exactly what to do. And this is one thing that most online gurus would charge thousands for, but today I'm going to be giving it away completely for free. And all I ask is that if you do find some value in this video, is if you just drop a like below. So guys, what exactly is the issue with these ICT concepts? You know, you see all of these guys online talking about ICT concepts, that they stand behind it, they make profit with it supposedly as well. So what exactly is the issue? Now, before we get into this, quick preface. I'm sure there are people that are consistently profitable with ICT and make money with it, and I'm in no way bashing the strategy itself. However, what I personally believe is that there are numerous different trading strategies in the industry which can get you to that stage of consistent profitability. ICT concepts are probably one of the hardest and most difficult to consistently apply. So my question to you guys is this: if you could learn a much simpler and easier approach rather than going with the very difficult rocket science level ICT approach, why would you not do that? And in this video, that is exactly what we're going to be going through. So the first issue that I have with ICT concepts, and like I said, the reason why I was consistently failing with it, is the fact that there are just too many different variables to consider, which can be overwhelming, and every single time you come to the charts, you're not really going to have any sort of consistent perspective on the market, right? There's all of these different confluences to consider, and that ultimately just leads to confusion and a lack of consistency every time you come to the charts. You're going to end up taking random trades. No two trades are going to look the same, which makes it impossible when you come to journal the trades, and ultimately then going forward, you can't improve because you don't know what's going wrong, because there are just too many different variables to consider, right? So what is the solution to this problem? And like I said, this is what personally helped me go from losing 4 years ago to then consistently starting to see 2 to 3% per month on my live personal account, as well as passing prop firm accounts and getting consistent payouts as well. So the solution, focus on simplicity, right? Now, having a few clear-cut and systematic rules to follow can not only help your trading results, but it's going to make it a lot easier when it comes to, like I said, journaling, improving your trading, and ultimately it's just going to take all of the headache out of trading, right? We all know trading can be very difficult. There are lots of variables to consider, and you know, why make it more difficult for yourself? Why trade all of these numerous ICT, very complicated concepts, when you could just focus on a few key confluences that you know ultimately every single time you come to the charts, if they're there, you execute a trade. If they're not, you don't execute a trade. And trading can really be as simple as that. You only need to look for a few different things every time you come to the charts. And this should be as systematic as possible, such that you can follow it step by step in a logical fashion every single time you turn up to the charts every single day. So as a general rule, every time you come to the charts, right, you should know exactly when to enter, when not to enter, and exactly where to get out. So your TP rule. One of the problems that I personally found when I was using ICT is that, you know, like I mentioned in the previous part of this video, you have all of these concepts. You have things like OTE, breaker blocks, you have silver bullet strategy, you have turtle soup, Judas swings, all of these different things, right? And the problem with having these numerous different things is that your focus is going to be divided so much that you're not going to really be able to have any sort of consistency in your trading, and you're not going to know exactly when you should be trading, when not to be trading, and exactly where to get out. Now, before I go through the strategy that I personally use, let me just preface this by showing you some results to prove this actually does work, right? So first of all, this is one of the recent payouts I had. As you guys can see, this was with a company called Seacrest Funding. And as you can see, this is the payout certificate right here with the name just below. And this was on my 100K funded account. Now to the right, and I know a lot of you guys would probably find this less impressive, but just quick explanation before I go through what this actually shows. Most of the guys in the trading industry, they push this narrative of you can make 10% per month consistently. You can make, 100K a month trading. You can make 100% returns in a year and all of this. But what I personally found, and by the way, I do know a few people that trade full-time for actual hedge funds, and rarely any of these top guys in the industry managing 7, 8, 9 figures in capital rarely manage to beat the S&P 500, which on average does 8% per year. Or if they are using a slightly riskier approach, they don't manage to consistently beat, 4 or 5% per month. Now, what you can see here is this is my live personal account. You can see at the top, it says real with IC Markets, the broker. And over the course of, this was last year's results, you can see I averaged 2.92% return. And overall, the yearly result was around 33%. And this is risking 1% per trade. So a return of essentially 33R. So like I said, this strategy doesn't promise you any crazy results like 100% per month. But what it can do for you is enable you to pass prop firm challenges and achieve a consistent return of 2 to 3% per month. So if that's something you want, continue to watch this video. I'm going to explain the strategy in the next part of this video. So let's get into the strategy itself. I think the easiest way to do this is to go through the trading plan and at the same time walk through a trade example that I sent into VIP a few months ago now. So first of all, step one of the trading plan, getting right into things, is to just identify overall market structure and direction on the daily and 4 hour. Now, the importance of this is so that we can gauge where higher time frame is looking to head and align ourselves with this directional narrative so that we give ourselves the highest probability of winning a trade, right? So first of all, let's go over to the gold chart and I'll show you the live trade example that I took a few months ago. So starting off on daily time frame, right? Here we can see overall daily narrative is very clearly bullish in this case. Price came down, swept previous lows, broke into new highs right here, creating a breaker structure. And one thing I always do when coming over to the charts is I will just mark on some of the previous structure just to make it clearer for myself and to see, where did price previously tap into, where did it create new highs, where did it create new lows, just to kind of add more clarity and to build that overall story around price to make it much easier when it comes to actually executing positions. Now, I said we're also going to the 4 hour. This basically just helps us to identify some of the more refined structure and exactly what price is doing. So in this particular case, you can see price came down, swept some of these previous lows right here, and tapped into an area of demand right here. So if we just draw that on, and going back to the trading plan, this is also one of the things which I've mentioned, which is to draw on previous mitigations and structure. So what I mean by previous mitigations is essentially where has price tapped into previously and reacted from. In this case, for example, we can see that price came down, reacted from this area of demand, and then starts to shift back over to the upside. So as you can see, as price comes down towards this area of demand, it creates lower lows and lower highs. But once it taps into this area of demand, sweeping higher time frame liquidity, it starts to create higher highs, flipping back bullish, and this is the first indication that we should now kind of switch our bias and look for longs instead of shorts, which we would have been doing so during this sort of downtrending structure that we had right here. So again, drawing on some of the most recent structure, what we can see here is that this was the most recent change of character on the 4 hour. For anybody unfamiliar with what a change of character is, here I mark it on with the letter C on my charts. A change of character is essentially when in a downtrend, prices creating lower lows and lower highs, and then breaks above the most recent lower high. And this is the first indication that that downtrend is ending. For an uptrend, it's the opposite. So prices printing higher highs and higher lows. And then a change of character is very simply when it comes below the most recent higher low, which again is a good signal that that trend is ending. Particularly when you have a case like this, where price has swept higher time frame liquidity and tapped into a higher time frame area of demand. Now, going over to step 2 of the trading plan over here is just to identify any valid points of interest. Now, for myself, this is simply an area of supply or demand within alignment, so aligning ourselves with higher time frame trends. So because price is overall bullish on gold in this case, we're looking for an area of demand to buy from. If price was overall bearish, we would be looking for a supply zone to sell from instead. So very simple. And I have a few main criteria that I use to determine what a valid point of interest is. And for myself, like I said, it's an area of supply or demand. It has to be in a premium or a discount, meaning below the 50% for a discount and above the 50% for premium, and it has to have an area of imbalance created. And essentially what this means is that, you know, price created volume in this area. It was an area where people were previously willing to buy or sell from. Therefore, when price comes back to retest it, it's very likely that people are going to be willing to buy or sell from that level once again, which is oftentimes why you see reactions from these areas of supply or demand, right? And finally, we have to see some liquidity being created above it. So let's go back over to the charts and let me show you exactly what I mean right here. So right here, so we've got this 4-hour bullish leg, right, in this leg. So if we just first of all draw on where our discount is. Now, a discount is anywhere below this 50% level, right? And what we can see here is that we have this previous area of demand, which for myself, I would just define as an area of consolidation that price broke out of. You can also see we had some liquidity being created right here. And we can also see price created some liquidity resting above this level. Now, the reason why I'm seeing this area as liquidity is because it's a previous low in the market that price bought from, right? It's the lowest point before price created this new high. Therefore, this is an area where people were previously buying from. So very often price gravitates towards these levels, takes out the previous buyers before then going over and shifting back bullish. So if we just change the color of this to show that price has tapped into that level. Now, next step, and this is arguably one of the most important steps, is we don't want to just like randomly buy or sell from our areas of supply or demand, right? We want to wait for price to show us whether it wants to hold that zone or not. And this is where the lower time frame confirmation comes into play. And for myself, to keep things as consistent as possible, I'm always using the M5 time frame to identify this. And essentially what step 3 constitutes is once price comes into this area, we're waiting for the M5 time frame, always the M5 time frame, to shift back bullish in alignment with this higher time frame trend. If we were looking for sells, we would wait for the M5 to shift back bearish instead. Now, what do I mean by shift back bullish? What I simply mean is that when price is retracing on the M5, it's going to look like a downtrend, right? So once it comes into our area of demand to the left, we want to wait for price to break above the most recent lower high on the 5-minute time frame, and then simply pull back into an imbalance and then look to buy up, right? Now, a few key points to note here is I'm only looking to enter if price creates an imbalance after the change of character. So if we draw that on, we've got our change of character, right, on the M5. We need to see price create an area of imbalance after that change of character. And then I'm simply waiting for a retracement into the imbalance, and then I'm looking to buy up. Now, going over to the charts, so price has tapped into our 4-hour point of interest, right? So we're hopping over to the M5 chart. Let me just play this forward a little bit. There we go. So price has tapped into our 4-hour point of interest, which is this box right here. So as price comes down, what I'm essentially monitoring is for price to break the most recent lower high. In this case, this is the most recent lower high, right? So we need to see price break and close above this level. Now let's play price forward. Right, there we go. So price has broken above and closed above. That's crucial. I always need to see a closure above the most recent lower high. Once we see this, we're waiting for price to pull back into an area of imbalanced demand. In this case, we have this one, right? So at this point, I would just be simply setting a limit on this area. Stops just below. And I'm going to mechanically target a 1 to 3 risk to reward. Again, this plays a massive role in the consistency element of your strategy. I don't have a discretionary TP rule because what I've personally found over several years worth of testing and refining is that if you have a discretionary TP rule, there's just really too much uncertainty and human error creeping in, because you could target, you know, this area of supply, you could target imbalance above, you could target this high. There's just too many different targets to possibly go for, right? So to keep things as simple and mechanical as possible, I always have this mechanical 1 to 3 TP rule. And obviously this is not just plucked out of thin air. A 1 to 3 was the optimal risk to reward I personally found with this strategy based on over 5 years worth of live trading and back testing as well. So that's the trade. All we would simply be waiting for in the live market now is for this to tag us in. And as you guys can see, once that does tag us in, price then shifts over to the upside once again. And this trade did end up playing out very nicely. Obviously, you could have targeted all the way up here, and in hindsight, that's very easy to do, obviously. But as I said, I always just go for a 1 to 3. Even if the trade does run past that, I don't really care, because I know that over a sample of trades, this is the best approach, which made me the most profit. So this is what I do, and this is essentially the whole trading plan, essentially. So if we go over to the trading plan once again, we've gone through step 3, which was the lower time frame confirmation. Step 4 is very simply just the TP rule, which is 1 to 3 risk to reward. Now, moving over to the risk management plan, arguably one of the key aspects of this entire system. And again, keeping things very mechanical and systematic, I use a 1% risk on every single trade. The risk, very importantly, stays the same no matter how I feel about the trade, and no matter whether I'm in profit or whether I'm in drawdown on an account. And the reason for this is just simply because, you know, how you feel about a trade is a very subjective metric. The trades you feel good about could be the ones to win, or they could be the ones to lose. And the trades you feel bad about, you know, they could be the ones to play out and win in the sample of trades, right? So it doesn't really matter how you feel about the trade, as long as all of your confluences are there. I enter the trade, risk the same amount, and how I feel about the trade has no impact on whether I on the risk that I'm using per trade, right? And again, no break even and no partials, simply hold into 1 to 3 risk to reward, stop loss or TP, kind of like a set and forget approach, which again is backed by data. This was the best approach I found over several years worth of data. And that is really it. So I've also included down here a few key processes which I implement and how exactly I do them, such as trade journaling and something called ASR, which is basically a performance review at the end of every single week, month and quarter. I will leave this in the description for free for you guys to download. You can download the entire trading plan right here completely for free, and you can read through these key processes in your own time. But this isn't really what this video is about, so I'm going to skip over this for now. All you guys need to take away from this video is this full system right here, which again, I'll leave for free in the description below. So guys, it all really comes down to simplicity. The simpler and more systematic your strategy is, the easier it's going to be to stay consistent and achieve consistent results. Now, because this was a short YouTube video, obviously I didn't have enough time to explain all of the nuanced details behind the strategy. So if you want over 30 hours worth of content breaking down the entire system, as well as to attend daily live calls with myself, where we analyze price together, as well as my exact trade entries, check out the first link in the description below. If you also want to see me backtest this entire system over around a year's worth of price action, watch this video next, where I break it down on gold and go through numerous more trade examples. But if you did enjoy this video today, like and subscribe for more content like this, and I will see you guys in the next video.